Monday, Warriors. How's everyone doing this week?
What motherfucker, why?
Let's make the most of it. Who's in the background? Hi, Glenn, Kevin, Zig. Everyone doing okay? Have a good weekend. All ready with your technical areas to take action instead of trading on the fly. No FOMO, no impulse trading. Everyone promised no impulse trading. Morrow, Maud, you promised. Luca, I know you won't. Okay, so I have a few things to say early this Monday morning. Hi, Jess. If you look at last week's range in the S&Ps in face of the Fed and everything, it's one of the tightest ranges going all the way back on the weekly here. And it's my contention that if the dollar is heading down, euro is heading down, dollar is heading up, it's going to pressure the market. It's not going to take much for a 2-week reversal. And even if this isn't the top, which I don't really think it is, I think we could pull back to 24.50 or so this week. Everyone with me? It's not going to take much for a 2-week reversal if you know that method. So that's my view. And, you know, there's lots of confirmations. Here's your weekly RSI up here. So neither of these two previous highs, of course, this was confirmed, but even the first divergence was 73. Too much mo for me, but up here under 70, maybe something cooking. Everyone with me on that? So it's like that on every time frame. So that's your weekly. Here's your daily non-confirmation last week. We've been diverging since July, February. What is this? Yeah, all the way back to February, the end of February. A long time. And then here's your 4-hour. So, you know, people ask me when I teach them about RSI, you know, I couldn't rule out one more shot down, one more shot up before we reverse 24.15. In fact, that would be my preferred, is to sell at new highs with the RSI on the 4-hour, staying under 70, just like it has. The momentum peak was here early September. Okay, so you move down to the 1-hour time frame, same scenario. Well, it's not working for me. There we go. Okay, so round, boring distribution top. You can't rule out one more shot up, but to me, there's more downside than upside. There might be, you know, 10, 15 handles to the upside, 40 to 50 on the downside. And I was looking at this in euro pound. That really on the 1 hour, we still have a confirmed low here. It's starting to look like, you know, a higher low. I don't know if I trust it, and I don't trust it because of this. Here's your 4-hour. I don't believe we made a new low here. So this still says euro's your preferred short. But watch out for one more low. You're going to have some multiple divergences on many different time frames. Maybe your daily. So here's some nice confluence here around 87.23. So maybe there's another 50 or so back, and that's going to be actually the 50% retrace from the low to here. Boy, you know, I remember when I first joined ForexAnalytix, Nick was bullish, and it was all the way back in here, looking for 92 long term, which seemed like forever, or kind of an aggressive call. And then we had the whole community taking advantage of this. So here we are approaching the 50% level. That may be it. Now we get to the pound. I know a lot of people want to buy it at 134. That was the talk in the room. I still think it looks incomplete to me. I would prefer to see one more shot up in the pound. This is kind of how it looks to me. We have a great guest, by the way, Valentin Schmidt. He's the editor of Epoch Times. He used to be a portfolio manager at BNP Paribas. So we could break down. We're just trying to hold this moving average here, but this would be more of my preferred scenario. You know, if both the euro and the pound go, I guess they're going to go without me, at least today. I just can't chase the downside in either. The short side of the pound, short side of the euro. Although last week I did favor shorts in yen and euro yen cross, and I looked at what Greg is doing, so he's not looking for as much as I am. I was thinking under 130, but here again, we're holding on by a thread. You know, we talked about this several days last week. So don't marry it, maybe 32.5. And this is the most important look that I have for everyone today. And this is the most critical technical information I could come up with this morning. And I want to thank everyone that's responded to our seasonal offer. But if you haven't, the window is closing next, I believe it's Tuesday, valid until October 2nd. Okay, so I don't know what you guys did this weekend, but I sure took a look on the TL page, scoured the pairs. It's part of my intelligence gathering routine, and it's great that it's in one place to get all of these different methodologies and talented traders to take a look at what's setting up for next week, along with Blake's a look at the week ahead. But again, you get the basic technical. This is mainly Blake and Steve's stuff, as well as sticks. So that's why you'll see them holding, you know, having similar looks. Steve's still looking at the head and shoulders top. After the Fed, we did not take it out. You know, we held. And if we fail again, some decent targets off this, down to 115. Now, I do think if this count is right, it's going to pressure the S&Ps. I'm of the mind that when the S&Ps top, I kind of buy into this theory, it's all one market. So when you think about it, almost everything goes up together and down together. You know, in the old days, you used to have things move counter-cyclically to each other, like gold and stocks and bonds and stocks, but the weak dollar has been supportive of the market in my view. So if we're going to get a sell-off and a recovery in the dollar, maybe back to 97, I think that's going to create at least a short-term sell-off in the S&Ps. But see, you have this view from Steve, you know, and then I wonder what Nick is thinking here on the euro. And no change, choppy wedge, 1870. So we're right there at 1870 support. Everyone see this? Okay, so 1850 is a big number. So we're all trading there. And then Grega, I think Grega still held out a count if 4 held. So we're back down here. We're challenging this triangle line. I would assume if we took it out that it might invalidate it, but he was looking like I was for one more push up. But I can't short it down here at this support level. Everyone with me? Okay, and then if I'm a novice trader and I want to learn about what Greg is talking about, well, okay, I see A, B, C, D. What is that, the alphabet? No, it's not the alphabet. It's an Elliott formation. Okay, so you have you're going to get educated on everything that we cover here. So excellent for newer traders. And then what you learn here on your own, you bring it into the community and face and ask questions. There's no such thing as a silly question. And as I've proven and Steve has proven and Blake, there are only silly answers. So don't be bashful. You know, you want to learn how to trade here. You're trying to become self-directed. It's all right here at your fingertips, and you have a week left to get these prices. So I'd like to say hello to the team. How you doing, Blaker and Steve and Stel? Everyone doing okay?
Doing great. It's Monday. I'm a little tired. You know, Mondays are always tough. I think they're tough for everybody. You know,
Yeah.
But it's good. You know, hope you had a great weekend.
Yeah, nice weekend. You know, lots of football games, buddy.
Yeah, right. I hear you.
Yeah, I think I OD'd, but there was really one great game was Iowa against Penn State. You know, defensive battle. It was a great game.
Yeah, I saw a little bit of that game actually. But that's yeah, it was a really nice week. I actually played golf yesterday, which
oh yeah, it's cooled off for you.
It was gorgeous. I mean, it was in the 80s. We haven't had that for a while, so it's definitely nice to take advantage of it. I got a new driver because I got it as a gift for my birthday last. And
you broke it in person.
Yeah, I did, and unfortunately, it hit really well. So because it hits really well, I swung the club a little harder than I normally do, and now my back is a little sore from from really getting a little crazy. I had like my drives were consistently around 260, 265, which is pretty long drives for non-pro 40-something-year-old guy. But anyway, no, I had it was good. I had a lot of fun. But you know, we're starting a new week, and this is here. I'm going to take you over to the euro dollar, and you were talking a moment ago about how important the 118.50 level is.
Yeah.
And I have to say, this is, and you guys will be able to see it here, this is really critical support. I mean, it's trendline support. It's it's trendline from basically the bottom, near the 106 level, where we really started rallying and accelerating. And we have Mario Draghi speaking today. So this is
Oh wow.
Yeah, he's speaking in 50 minutes or so, and he's talking about monetary policy. So it's not like he's just delivering some London speech. It's he's talking in front of the in front of the European Parliament. So this is obviously a very, very key. What I'm really more inclined to do at this moment is, because we're at support, I think a lot of people can get sucked into shorting the euro if it breaks 118.50. I'm actually looking more for a close today. Like where do we close? I mean, if we and let me grab the pen here. Like
it kind of makes sense.
Yeah, I mean, because we very easily do this.
Yeah.
And that to me is worrisome. That I don't want to get sucked into that trade. So what I'll be looking for is I'll be kind of looking for us, if we close down here, like by the end of the day, then I'm going to start selling rallies tonight. That's my plan.
Good plan.
Yeah, because it's such. I mean, believe me, we're not.
Let it prove itself to the downside, and then look for reaction to take advantage of it.
Exactly, and there's a lot of great opportunities out there. It's not just the euro dollar. I mean, you can look at the euro and go, well, how to trade there, but you look at the dollar Swiss. The dollar Swiss has been holding up, and we're probing some pretty key resistance here. You go over to the Nordic currencies. You got Swedish krona, the threatening breakout. There's a lot of different trades that are really setting up, but another trader earlier this morning was talking about the euro, and I'm like, I'm not 100% convinced that the dollar's ready to turn. I think it is, but I'm not super confident. Every time I've been how I feel fairly confident of dollar turning, it has reversed on me. So, you know, and I've been trying to play the dollar long for a while. And, you know, so just like most people, we're just kind of nervous at these prices. So you got to be, you know, careful here. I think we are breaking higher. We've broken out of this down channel. You can see we're probing right into really key resistance here in the dollar index. I think it's going to break. You know, I've been, you know, what's the famous George Bush saying? Fool me once.
Yeah.
Fool me, fool me twice. Whatever. He didn't say it the right way, but anyway. But you know, the thing is the point is you got to be. I think you got to be extra short. I was just short the euro pound just a moment ago, and I just closed it out right around here. I think the euro pound looks very vulnerable. One of the great things about the euro pound, in my opinion, for those of you that are short still, I mean, I have some traders that are still short. Stelios is still short. I know some traders that have long-term positions that are short the euro pound. The greatest thing about the euro pound is that the recovery has only been up to a 24% retracement. So, you know, when you only have such a shallow retracement, that means it's not letting new shorts in the market, and it's not letting any longs out of the market. And yeah, that's a recipe for a disaster. So to the downside, you can't muster a rally after this big decline, and you only get a shallow retracement. The next move is going to be down more than likely. I mean, there's you know, and so I'm targeting the euro pound on the downside. I was just short just a few minutes ago, you know, and I covered it. I shorted like 88.02, and I covered it at 93, right where we're at, and I'll short it again too. And this is, like, in my opinion, even one of the better opportunities versus trying to figure out if the dollar is going to break out or not.
Yeah, that's a good point. Yeah, because it doesn't matter. Yeah, Stelios is saying you're lagging a bit on your audio.
Oh, did you notice? Did you notice it as well?
Yeah, and I still am a little bit.
You are. Okay,
Yeah.
well, you know, I guess what I'll do is I'll just mention a few other comments, and then I'll flip it over to Steve. So this week, you know, obviously everybody's looking at the dollar. Also keep in mind that we are, this week is the last week of the quarter. Then we're going into the fourth quarter, so this is the last week of the quarter. There's going to be a lot of flow you know, here over this next week. So just be really cautious of, you know, order flow that's going to be coming through the markets. The other, I just so you guys know, I did play the euro pound to the long side over the weekend. I did manage to get out of it early, a little too early. I got out of it like right around here. I played it to the long side. The Hung Parliament in New Zealand really hit the New Zealand currency, which has allowed the Aussie New Zealand to have a significant bounce from a 38% retracement, which this is important right here. This 38% retracement, because I'm going to trade long against that. That means that if we get dip back down here in the Aussie New Zealand, I'm going to get long again. So I do want to play that alongside the New Zealand pairs, the Euro New Zealand, the Pound New Zealand. They look like they're building some sort of base, you know, maybe for higher levels as well. The pound, UK credit rating downgraded by Moody over the weekend, which hit the pound a little bit on Friday, late Friday, but I still wouldn't mind a dip in the pound dollar, especially if the euro breaks. So, you know, obviously we're all watching the euro dollar, right? If the euro dollar breaks through 118.50, there's a good chance that the pound dollar is going to break through this 134.50 as well. might get down to 134. We might get down to 133, 30, because it might follow suit with overall dollar strength. But if that happens, I still want to be a buyer of the pound on a dip. So I'm kind of hoping the euro breaks down and it drags down the pound dollar so I can buy it cheaper.
Right.
So that I'm kind of waiting for.
Yeah, you've had a lot of patience, and but it doesn't matter that it didn't happen last week. It's the level's still valid. So
They're still valid. They're still valid. But remember how we talked about last week. You got to understand the reasons why. Okay, if the euro dollar breaks down, it's going to drag down a pound dollar, and that's why you gotta think. Okay, well, the pound probably is just going down because of overall dollar strength, not necessarily because it's pound related.
Right.
So therefore, I would be a buyer on a dip. If the pound was dropping because it was something that the Bank of England said or did, that would be a different story. But in this case, I still think that the pound dollar could be purchased at a lower level if it gets down there. But I am gonna be ready for it if it does come down, and I'm hoping the dollar gets a recovery. It's what my hopes are that the dollar does recover. One of the other things that I guess I should mention too is that with the German elections, the alt-right and they took a few more seats than I have to go back and look and see what the numbers are, but you can see that the euro dollar, it's one of the reasons why the euro is weak, and the euro yen had turned lower, and I had a euro yen short on for the weekend. All the guys in the chat room knew that as well. I took a position here. And Matt, by the way, if you guys, and one last thing I guess I'll say before I turn over to Steve, is Steve even here this morning?
I don't know. He's here.
Yeah, he is here. Hey, before I turn over to Steve, good morning, Steve. I just wanted to say, guys, you can see that our chat room is extremely busy, and to get involved with the chat room, you have to go to ForexAnalytix. Take advantage of the semi-annual and annual plans this week, or unless if you've been a month-to-month subscriber for the last 6 months, you also get access. The reason why we do that is we want to make sure that if anybody's in this chat room, that you guys are serious about trading, and not a fly-by-night type of thing. We've got a lot of traders that have just gotten interested in the markets, but they got interested because maybe the rally in Ethereum or something, and we would just want to make sure that people that are in the chat room here are all people that are committed to doing it and doing it consistently. So that's why we have that the subscription package. That's why we have the offer, and we have a bunch of goofballs in here that are saying hello. And these are all, I say goofballs in a light sense. These guys are all great guys and gals. We have a lot of fun in here. We also talk markets, and I talk about a lot of my active trading, like for example, like right here, I said, sold very small euro pound, and then I got out of it right here, close euro pound for 10 pips, and I do a lot of small scalps in there. So does everybody else. It's not stuff that I'm going to talk about over on ForexAnalytix for the patterns in play, because the patterns in play are much bigger developments in the markets that are much more technical in nature, that have they're not scalping opportunities, and those we talk about a lot in the chat room. So yeah, to take advantage of the chat room, make sure you get your semi-annual or annual subscription. You only have until next Monday. It's actually Monday, October 2nd.
Roberto just signed up, Blake.
Awesome. Well, Roberto, to get in the chat room, just so you guys know, if you click on you click on your settings wheel right here. It'll say go to chat room, and that'll get you in there. All right. Okay. And Steve, I'm going to pass over. Thanks. I'm going to pass it over to you. I guess I'm kind of laggy today. How's everything over there on your side of the world, Steve?
Less laggy.
Less laggy. Good.
I'm kidding. Everything is okay, Blake. As you saw, the German election, although I think it's
soft, Steve.
Yeah, it's a good opportunity to speak a little bit about some macro stuff.
A little more volume, please.
Yeah, it's going to come. Don't worry.
Oh, I see. Okay.
It will auto adjust.
Because we went from lag to whispering.
Okay. Don't worry about it. It should.
I worry about everything, Steve. Yeah. And don't tell me worrying doesn't work, because almost everything I worry about doesn't happen.
and Steve, I hear you were shorting the euro earlier this morning too.
Actually, late night for me, Blake. It's before I went to bed. I was looking at the very, very, very little reaction that the euro had to the German elections, which on one hand I understand, because the problem that came up, which is like the rise of the far-right party, more than expected, is not something that the markets are supposed to discount, in the sense that it's not something. I mean, there is a lot of saying that the markets roughly discount like 9 months ahead. So that's not something that it should affect, so soon. But on the other hand, seeing that, the Euro USD opened with a little gap and was almost at the point that it would retrace completely the gap, just before I went to bed, it was at 119.20, and I said to myself, listen, I mean, at least we should get like perhaps 1-2 days of downside following this, or definitely not going higher. So I shorted it at 119.20, although my initial plan was to short it, if it closed below the neckline, exactly what you described that you want to do today. But seeing that we had almost retraced the gap, and being really, strong-minded that we wouldn't see it push higher like during the same day, I found it quite unlikely. I shorted it with a 30 pip stop loss, I think 35 to be exact. My stop loss is above the closing price of Friday, and I said to myself that, listen, if it works out, you got a better price. If not, it's a minimum risk.
That makes sense. Good. That's good. You got a good early start on the trade.
Yeah, so let's see how it works. As you said very well, and I don't think we can say much more about it, 118.50 roughly is the key level, because it's a confluence of a horizontal support, of the ascending, people can see it here, of the ascending trend line of this channel, and also it's the neckline of this head and shoulders. By the way, Blake, I don't know, Stelios might have some comments. I don't want to go into the German elections. We can leave Stelios do that. We can let Stelios do that.
We also left a little gap today, didn't we, Steve? And it tried to fill it.
We did. We didn't fill it completely, yes.
We didn't fill it, did we?
No, not completely.
Yeah,
we came close, but not completely.
Okay.
We also had in Japan, Abe announcing that he's going to also go to snap elections. I don't know if you saw it, Blake, because I know that you wake up just before we go to the webinar. But I saw it a few hours ago.
I missed that.
Sorry, mate, what?
Missed that.
Yeah, Abe announced that Japan will go to snap elections, not probably, because he wants to extend, the time until the next election. His popularity has gone up recently, so he wants to take advantage of that to renew this term of his government. He, the first estimations is that he's going to keep the government and the majority, but he's going to lose the super majority of 2/3, which he had said that he's going to use it to change the laws, the military laws about Japan's engagement in military fights, etc., etc., etc. So he's trying to catch the the other parties like a little bit of guard, and I'm really curious to see, because he has also announced that he's going to give another stimulus package, etc. So I'm guessing that if we start seeing polls showing that he's going to win the re-election, I'm guessing that that's going to end up being yen negative, in the sense that, you know, he started promising like more stimulus, etc., etc., etc. But I don't know if Stelios has looked into.
It sounds a little bit like what Theresa May tried to do, right?
Yes, that's what I want to say. But as we've seen in the recent past, you know, that might also entail some risks, right, Stelios?
Always, always, and things are very volatile. I mean, we've seen it in so many countries, so many elections. I mean, I'm not a specialist in either, you know, German politics or Japanese politics. The only comment I'd like to say regarding the German result is that there will be, I mean, there will be a coalition which, you know, more or less should be a bit of the same as it has been up to now. But I think, in my opinion, the main problem again is the rise of the far right. They're not gonna, you know, they've gone into parliament. They're not gonna play a huge role. So on this occasion, just like in France, where Le Pen lost narrowly, or maybe not so narrowly, but you know, she lost in the runoff. It's not the actual result right now, it's what's going to happen next time around. That's what scares me about Europe. And
yeah, because, you know, Hitler lost his first election too.
Exactly. And you've seen it starting in Greece, and then France, Austria, now Germany. And this is, what is this vote? It's not like, I've been saying this to a few friends, you know, on the chat room. It's not like people woke up from one day to the next and they're, you know, big fans of extreme right and, you know, neo-Nazis or whatever. No, this is a vote of, what word did I use? They're protesting, right, about how things have been going so far.
They're angry,
so that's,
very angry.
Exactly, and you will see people that you don't expect to do that. Like, you know, I'm not supposed to say this, I don't think, but, you know, my mother at some point said, oh, I'm going to vote for this far-right Greek party because they're going to clear up the place. And I said, no, you do that, I'll never talk to you again, you know. But, you know, it's basically people who don't know how to direct their frustration, and this is like their last option. So that's what scares me about Europe more than anything else. It's not the results that we're getting now, it's what's going to happen in 5 years from now. And that's the reason why I am feeling very, very bearish Euro and everything in the medium term. I mean, 5-10 years from now, unless something structural.
You know, DB has some great insights, and he's saying that this, what Abiy is proposing is minuscule, this stimulus package. 20 billion is like a rounding error.
Yeah, it's 2 trillion, if I remember right, it's 2 trillion yens, actually.
Yeah.
But
yeah.
But I think that he also he's also talking about other changes in the economic plan, and you know how it is ahead of an election. I'm more or less certain that the more we approach the election date, the more he's going to start throwing in the mix, you know, to persuade people to vote for him. So it wouldn't surprise me. He has done it in the past. It wouldn't surprise me if he starts overpromising on the economy side. And
he's also kind of a hawk, isn't he, Steve?
Who?
Hawk? Yeah.
In
I
what
mean,
kind of sense?
with missiles flying over his country, he's more of a hawk than the other.
Oh, so you mean in that sense, not in the monetary policy?
No.
Okay, yeah.
Building up Japan's military.
Yes, totally.
And all I know is if I lived in Japan and I heard air raid sirens again, I'd want a guy like that.
Yeah, but the thing is that if you lived in Japan, you wouldn't hear sirens again, because the vast majority of the people that had heard them back then are now dead.
No, but they went off the last missile launch by North Korea.
No, I know. So you mean, I thought you meant the connection between, the incidents of World War II and
no, recently.
You're right.
When missile launch.
When it flew over Japan. Yes.
Yeah, that's what I'm saying.
Yes, for sure. Anyhow, let's go through some charts because I think we have some interesting things to look at. Euro yen Euro USD we already talked about. I don't think we have much more to say. But I think that we also have a development in the euro yen. It might be even worth watching it on a 4-hour chart here. Let's have a look at it. So, euro yen developed from an ascending wedge to another ascending wedge, and is currently breaking down. So I think that this development in euro yen, Blake had made an amazing short here in the euro yen. Unfortunately, the market decided to take it out like incrementally before actually turning. It's exactly what had happened with my euro kiwi. Sometimes this happens, but I think he had already started smelling the momentum loss here, which is obvious. And now for the first time after a long time, we are also seeing like a lower low here. So I think that euro yen looks good for at least a retest of 131.50 roughly, somewhere here, or 132, which is this high. So I think that euro yen has at least started the correction, and this should be good enough to produce some more downside. Euro pound, Blake showed it, but let me say that my opinion is, I also said it on Friday, this is some kind of a consolidation pattern. Most likely I had said back then as well that it is a triangle, and the more we get of this choppy price action within a short range, the higher the probability that indeed this is simply a fourth wave triangle, 1, 2, 3, 4, 5. So it looks very good. Unfortunately, I was a little bit greedy and I didn't manage to add back the 50% position that I had closed. We had talked about that, if you remember, on the webinar. I was looking initially for perhaps an ABC move, a little bit higher. So I was looking between 89.20 and 90, a retracement back there. But as it seems, it's much more bearish. So I'm still only with half a position. And I really think that a push to 86.50, from what it looks like at the moment, is something that's going to happen soon. So euro pound remains bearish. There's no question about that. After we get there, perhaps we're going to see like, a stronger pullback. But only the fact that this is a 5-wave move down that we're about to see, I'm more or less convinced. And, a new low will 100% solidify that view, says a lot, because that means that after seeing a 5-wave move down, it means that at the very, 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 very minimum, we will have to expect at least one leg lower after some type of a correction. So it means that we should keep looking lower for the euro pound for some time to come, okay? If not more, because this might just prove to be like a wave one of a new sequence that's going to turn lower, okay? But I'm saying that at the very, very minimum, we should expect then another leg lower at the very minimum to perhaps, the very minimum expectations if we see this 5-wave down will be an A, a 5-wave A, B, C. You know what I mean, Dale? Yeah. So there is absolutely no reason for somebody to turn bullish, if not just for a scalp. Which personally, right. you know my style. I'm going to try to catch a reversal if I believe that it has a good chance of being an actual reversal. But instead of trying to catch scalps on the long side, I would rather short bounces. You know what I mean?
I hear you.
So that's with this as well. And since there is a lot of interest on the euro at the moment, let's have a look at the euros and the euro kiwi as well to at least close with those. Euros, I don't have much to say. I've said it many times. This has become extremely choppy here in this range. So not much to do. Somebody can even interpret this as another triangle in here. But I can tell you one thing for sure: this is definitely some kind of a complex pattern that's happening here. If you look at this move from these lows, I can say that if I had to be something, it would be long. If I had to be something, I would be long. But I'm not really interested unless we close above this area, like 151, let's say. I'm not really interested to start getting involved with something that's so choppy. So I'm tilted to believe that it's going to move higher, but as long as it keeps going up and down, up and down, up and down, and sometimes violently, I have no reason to get involved with it. Euro Kiwi, on the other hand, it is much cleaner because it can, that's why I've told you many times that sometimes you need to readjust the way corrective patterns are shaped. Perhaps this is a descending channel here, but one thing is for sure that Euro Kiwi is still within a corrective pattern. The fact that we are drifting lower in a choppy manner also points that this remains bullish. So I would expect that could have been a bottom here at the 50 DMA. 160.60 is a zone of interest for me. So in any case, I would be paying attention to this channel, because a break above it can probably indicate, the resumption of the move higher. So, I was looking to be short. Unfortunately, we got stopped out like incrementally. It did produce the move we wanted, but that doesn't change the fact that even if we got that right, which we almost did, it would have proved to be most likely than not a corrective move. Okay, so if I was still involved with it and I was still short, I would probably be booking some for sure, because as I told you, it doesn't look impulsive for the time being. And EuroCAD, last but not least, also remains in a range while below this ascending wedge. So it has started becoming more complicated. The two areas I'm monitoring is 143.30 here and this area up here at 150. So as long as we stay, I said a few days ago that it's also this area I'm looking for. So as long as we stay below it, even though we are in between these big support resistance areas, I would be inclined to look short, and that's why we drew that back then. And as it seems, that's the case. So as long as we stay below, we close below, we don't close above, let's say 147.60. It's obviously a better choice to be looking lower, but also not so much clean anymore. I mean, as a chart, so I'd rather be involved with something else. Did you want to ask something, mate?
Oh, I hear that Greg is here. That
He is?
To present. Oh, okay. And
Oh,
also
nice.
Luca.
Hey, Greg.
And Luca's talking about a bear flag in Kiwi after the elections. He's pretty good. And he's also saying that he'll be praying and singing at 3 p.m. UK time when North Korea makes a press conference.
Since we have Greg here, let me show you what I see in the Euro Kiwi. And I'm pretty sure that Gregor sees it the same way. As I said several days ago, Gregor wasn't here. This looks to me like a corrective pattern, an ABC. It's also nicely channeled.
Yeah.
So I'm inclined to take this as a correction to this move lower and be looking lower. But Gregor, this is your field, mate. What do you say? Gregor? I see he's unmuted, but I can't hear him.
You said
Gregor?
something about alcohol earlier.
Let me see.
Hey, is it hear me now?
Hey, yeah, now we can hear you. Okay.
Yeah, put the cap back on that whiskey bottle.
Yes.
So, what do you think about what I said for the Kiwi, mate? Are we on the same boat?
Yes, I'm also bearish. As you know, I shared PIP as well last week, but because of elections and because of
Yeah, you didn't want to take the risk. Yes.
Yes, strong rhetoric between North Korea and Trump. You never know how the US dollar will actually respond to those Trump tweets actually for the weekend. So probably it's better to be on the sideline during the weekends, so I stayed on the side. But still, the pattern looks very good, very valid, and bearish for sure. As you said, we are probably going lower, and I would be looking for 71, maybe even by the end of the week.
Okay. We also have there not only this low, but we also have the 200 moving average. So this is going to be a very critical, this area around 71.30, 71.50 is going to be very, very critical for the trend. I'm guessing that a close below there should accelerate. Perhaps then this is going to improve.
Maybe you get equality, Steve, off the first break from the high last week.
So you mean like an ABC?
Yeah.
Not the 70.
What do you think, Grega?
Yes, that's definitely the minimum expectation. So, but the minimum expectations, as we said, these new lows from September could be triggered. But now, if we consider that actually that was a September low,
let me give you the screen so you can show it directly on your chart. Sure. I just passed it.
Yes. Okay. Which screen do you see?
None to begin with. Now we do. Now we do see the Euro Kiwi.
Okay. Just a second. Okay, actually, on the daily chart here, I marked potential top in place here because it was just a temporary push to a new swing high, and we then strongly turned to the downside. And also, it can be forming here bearish head and shoulders pattern. Maybe he was left shoulder, head, right shoulder, and
yes. I can see it.
Continue lower. Yes, and also here, if we consider that actually this low, let me look at the 4 hour. This was actually low on August 31st. Actually, led to say from start of September we moved to the upside. So if by the end of September we retrace the whole corrective rally, then this would be a very strong indication that September was just nothing else than just a pause within the current new downtrend, and we could experience much larger sell-off in next month, and not just going to your 200 moving average, but there is potential for much sizable move to the downside if we consider that whole September rally was nothing else than just a temporary recovery. Okay, so I'm really curious to see how market will actually close by the end of the week, because as you know, this will be also the monthly close. That's why I highlighted this start of a corrective rally from the start of the month. So I'm really interested to see where New Zealand will finish this week. If we will see much lower prices, let's say 140 pips lower, then I think that we may see much lower levels, and potentially we may even retest the lower side of this trading channel here on a daily chart.
Speaking of that, Grega, since I'm sure you're going to be showing more than one pairs of the US dollar, and I know that many people, you know, have given up to the DXY, etc., to the dollar in general. Why don't you take us over of what pattern you currently see in the dollar itself before we look at more dollar charts?
Okay, so we may start with the dollar index, of course. Okay, that's some old charts. So on dollar index, I still think that we are here in some final stages of this downtrend in wave C, which is actually part of this flat correction. We can see some nice reversal candlesticks that can be forming now in September, but the issue that I have is that this recovery from recent lows is not impulsive. Okay, so I'm wondering if maybe we have another move lower to go and then we turn to the upside. But the fact is that I'm still expecting a break to the upside.
In that count you have on the left.
On the left, yes.
Yeah, in that count you have on the left, though. I mean, I understand what you just said. You said that currently the recovery is not impulsive, and I agree with you. But on the other hand, we have already met minimum expectations for this to be wave 5, right? So to have already seen the low, I mean.
Yes, it's very possible, but for such scenario, what would I have to see is some strong recovery by the end of the week, and maybe even closing price action on Friday somewhere above 94 or maybe even higher. So I would, if I maybe just make a quick, actually I have here this wave count, it's count 2 as you can see. So if we adjust this wave count maybe to a bullish case, what would we have to see is an extended 5-wave movement within this red wave 3, okay?
Absolutely, yes, I'm with you.
So that's what I highlighted, that by the end of the week, we will probably have enough of data to confirm where we are on dollar index, but if we'll see a push to the upside above 94, and more importantly, in such case, we would went out of this channel, if I highlight this channel, which we talked already a few times in this webinar. So we have this still a trading channel, but if we break this upper parallel trend line, then this would cause an acceleration. Acceleration typically occurs in wave 3 of a 5-wave movement, because wave 3 is normally the sharpest wave. So if we can break above 94.30, then this could be even first evidences that we are making a new impulsive 5-wave advance, because we would expect an extension to the upside. So by the end of the week, if as you said, if we go back to 94.20, this could be quite stronger indication that we are going much higher, especially if we consider that we would then see quite decisive break out of this downward channel as well. So and monthly close, as I said, will occur, so it should be pretty interesting. But for now, if we consider what is actually happening right now, and now what we think it will happen, it's still sideways. So looking for any dollar bullish setups, it may be a little bit too soon, but if we want to be long dollar, then maybe, as you said, New Zealand dollar is better choice for sure. So in dollar index, that's for it, and on euro dollar, still can be in black wave 4. Here is the recent wave count that I just looked at it. It's probably that we could see another spike lower and then turn to the upside. But again, it's a little bit too soon to look for any trades here, because we are just chopping around. So if we are sideways since start of August, that's for 2 months, okay? So looking for trades in this range, I think it's not worth of any money, in my opinion. I personally, I'm focused more on yen crosses. Right now, I'm looking at euro yen. So before I go to euro yen, let me go to this 10-year US notes. As you know, Dale and Steve, we were looking and expecting a reversal from this 4th wave. And yes, you can see we have seen a very nice move to the downside. We broke this trend line.
We got 10 consecutive down days, 10 consecutive down days.
Okay, so that's a really strong indication that we are likely going even lower. So watch out for pullbacks towards this trend line, and then this could cause a new sharp decline here. So I think that with that being said, stocks could remain in risk on mode, which means that Japanese yen could stay under pressure. So being that said, I would keep an eye on more upside on yen crosses. So euro yen is here that I'm looking at. Here on the right, we have 1-hour chart. What you see is a nice impulsive break to the upside that started 2 weeks back. It should unfold in 5 waves. So this is wave 1. Then we have seen a wave 2 pullback, which retraced perfectly to this upper triangle line. So as you know, broken triangle will become a support here. It occurred a very nice spike and then made a new 5 waves to the upside, which I believe it's a wave 3. And earlier this morning, I highlighted this pattern, a 3-wave decline, which already retraced for 38.2% just now. Okay, and
to be honest, I was showing it before, and I was looking more for a move towards 132 before higher.
Okay, but that's definitely possible. But if I simply consider the basics of projections for fourth wave.
Yeah.
Yes, so 38.2% were achieved, and notice that wave 4 in distance is almost equal to wave 2. And also, if we consider time, I think that there is definitely enough price action here for wave 4 to be near completion. Here was also area of former wave 4, which was spiked lower, and you can see now we are reversing. So probably there were some stops cleared out at these levels. And also what I like about this euro-yen is that we have seen some nice move to the downside on Monday. I normally don't trust flows on Mondays. I think that they are in 70% of the time they are reversed in the week ahead. So I would not be surprised if we'll see actually move to the upside. From a confirmation point of view, when we would say that wave 4 is finished is when we cross this price right here at 133.60, because this would make an overlap then with this recent wave that could be maybe even labeled as a wave 1 or wave 2 or wave and then wave 2. But if we make an overlap, then you know that this is confirmation that market is not in an impulsive fall. So keep an eye on 133.60. If we cross that, it would give us even more evidences that we are making a new wave to the upside.
But still, you expect that to be a wave 5, so in essence a terminal push, since then we should expect a deeper correction for the whole move, correct?
Yes, because we are, as I said, tracking final stages, and I'm looking this to be final stage of a wave A of these 5 waves to the upside that is unfolding since April. So after that, we could see a new correction, of course, and I think that on stocks also we may experience some deeper corrections in.
Okay, speaking about the risk and stocks, then what is that you currently see in what is the upside target before a correction, for example, on the SPX, which is also considered to be the risk barometer?
On S&P 500, I'm looking for another and final push to the upside here from a wave 4. There is a wave 5 targets at 25.35 that I see.
By the way, that's a target I also have, Grega, because it is the 161.8 extension of the 3-move correction we had from the August 8 high. So it's also a confluence there. I mean, it's what you're targeting. Yeah.
Wow, this one. So maybe an extension.
Yes.
Of this.
It's the 161.8.
Yes.
Yeah.
We're good actually, because here we could easily also label wave 3 and maybe then make an extension of your 161.8 of wave 4. So yes, that's a very good point. And here I marked with orange this triangle measurement. So normally in triangles, when the breakout occurs, which was here, the following move can be similar in distance compared to the widest leg within a triangle, which was clearly wave B, okay, of a running triangle. So that's why I'm looking towards these levels. And also traders will know that we need 5 waves up. Clearly that's not the case yet. So I'm staying bullish this week for the S&P 500, or also on DAX, looking for similar price structure here. We are consolidating in a wave 4. Actually, when I joined the webinar, I just was working on this wave count, so I can finish it now. Here on 1-hour chart, I'm looking this to be wave A, wave B, wave C. We are now probably in wave D and wave E. Okay, so maybe tomorrow we will see a new start for a new push to the upside into wave 5, and that's when I would also expect the set euro yen to make maybe to move to the upside, and S&P 500 as well. So
okay, but the big question is, on your big wave count, that 5th wave push to new highs in the SPX, that yes. that would point to the end of which larger wave? 3.
Of the wave 3, yes. Just let me find the chart.
So then we should expect a much deeper correction, right?
Yes. So this would be then wave 4 that is part of a 5-wave rally within red wave 5. So red wave 5 is visible here on a monthly chart. Okay, so we are still in the middle of this red wave 5, which is missing. Just a second. Okay, so I'm looking for more upside here after this wave 4 pullback will show up, and I think that we could stay then bullish even once we get the wave 4. If we assume that in the last 2 or 3 months of this year we will see a pullback into wave 4, then maybe expect a push to new high in wave 5 again, and strong months in the start of 2018, and then maybe later next year we could see some first reversal signs of a new bearish trend. So, but for now, stocks are still up. We still don't see a completed uptrend, so we need to stay with this flow for sure. And
completely agree with you. Like
yes.
like it or not, the trend keeps pointing higher. What can we do? It is what it is.
Yes, exactly. But for the short term, as I said, it's really important to understand that we went out of the triangles. We know that triangles occur prior to the final wave within a larger trend. So this wave 3, black wave 3 in our case, is a large trend. Okay, so we are in a final wave to the upside, which means that sooner or later we will see a reversal, and probably price will drop back to this triangle range. And I think that this may occur in early next month. Okay, so buying stocks for a longer period.
You know something. It would also bode well with seasonality, in the sense that we very usually see reversals at the beginning of a week, a beginning of a month, a beginning of a year. So, for example, today is the 25th, and it's a Monday. So why not, stay broadly up or go higher during this week, and then start the next week, which is also going to be the start of the new month, and with a new short-term trend, right?
Yes, exactly. So I think it can be very interesting. But maybe traders are still looking to join, some short-term traders to join the trend. Maybe now it's time to look for final parts to be in, but then be aware of reversals for sure.
I agree with what DB just wrote, and I showed it last week as well. I don't know if you're doing a little wave on specific stocks. I showed early last week that, in my opinion, Apple is breaking. He says, his exact comment is, many of the NASDAQ and FANG stocks have already started breaking lower. And
which stocks?
Hi, Valentin. I see you.
Apple, Amazon.
Okay, maybe then we can look at next webinar. We are out of time, I guess. Maybe we can look at those.
But do me a favor and look at these specific stocks, because honestly, especially Apple, I was monitoring it since early last week. It shows some downside acceleration potential. So this should take the market with it sooner rather than later.
Yes, of course, definitely. Okay. We are in contact, of course. Okay, thank you very much. Thank you, guys. Dale, thank you.
Thank you, Dale. Have a nice interview.
Grega, Steve. Okay, everyone, we have Valentin Schmidt with us today. He's the editor of Epoch Times. Hi, Valentin. Thanks for taking time to join us today. I'm going to make you the presenter, so we'll hear your voice. I'm not sure if you brought anything to show besides your blog or your website. You're still muted.
Hello?
You're there. Okay. Hi, Valentin.
Hey, good morning, Dale. Thanks a lot for inviting me on this. I just watched the last couple of minutes of the last podcast. Very exciting webinar.
Oh, thank you so much. And you're the icing on the cake today, Valentin. So I read a little bit about your bio, and you used to be a money manager for BNP Paribas before you went to, kind of, what did you do? Reinvent yourself as a writer and journalist. And I looked up the definition of epic.
Actually, that's funny. When I made the switch in 2012, because I got laid off because of the European financial crisis, and then I came over here. I thought that actually what you do as an analyst and what you do as a journalist is not that much different. It's you take in a lot of information, you analyze it, and then you write a report or you write an article. But essentially, that's it. You soak in info and you give out info. So obviously the formats are different and the objective is different, and you have to adjust the writing style and everything. But essentially, that's it.
I mean, you know, bottom line, it's safer to write an article than to trade that article, right?
Oh yes, and and actually that's for sure. But the same can be said with reports, because the reports that you do as an analyst, I mean, if you don't have the complete discretion to trade in your portfolio, and I was too young for that at that time, then it's similar. You just give your recommendation, but ultimately the responsibility lies with the portfolio manager.
So I'm interested in your ideas and your writings, and wondering, in this era, because I know you have a great interest in China, and I wanted to start off with the executive order that was passed or signed into law by Mnuchin and President Trump about anyone doing business with North Korea is going to be sanctioned from the financial system if they don't cooperate. And there's already a lot of movement to de-dollarize the financial system. President Trump seems to think China will cooperate with that. I'm thinking that maybe just for a while till it hurts or the risk is too much. What do you think China's going to do in this situation, combined with the geopolitical risk and now an executive order that's going to sanction people? And basically, let's face it, China does all business that North Korea does, 90% of it's with China.
Yeah, that's an interesting question. Yes, I have researched China quite a bit because our publication has done that, and I wanted to. By the way, how long is this webinar?
As long as you want to go. Normally it's 20, 30 minutes.
Okay.
So
very good.
It's not an issue though. So just relax, and I'll let you know, like your psychiatrist. I'll say time's up. Right?
Okay, very good. I just want to make sure.
Anyway, my psychiatrist would say that to me. Okay, Dale, I've heard enough of your stuff. Get out of here. So
that's funny.
Yeah, don't worry about the time, buddy. We're interested in what you have in your head.
Okay, very good. So I have a lot of things in my head. I don't have that many charts, but I can tell you about China, and I have to go back a little bit for your listeners to really understand at least our perspective, which is somewhat unique to this whole problem. And then I'll get more into the game theory of Trump and China, which is very interesting. So what most people don't understand, and I think that goes for most countries, is that China is not one entity, the same way the United States is not one entity. Like people in Europe always complain, yeah, the United States always bombs, the Middle East. I'm like, yeah, but who is that? It's not the people. Like if you ask people on the street here, they're not for war. It's not even the whole of the government. Usually it's just part of the government. And
the military-industrial complex.
Exactly. And they do those things, but everybody thinks it's the whole country doing it. No. The same is true for China. Even though they have the Communist Party and it's more monolithic and centralized than the United States or Western Europe, they still have their own fights within the party. And that's actually to come back to my story, and this will tie into North Korea and also my personal story, because I got into writing for the Epoch Times because I started to practice Falun Gong when I was in Hong Kong in 2009, the spiritual practice that the Chinese Communist Party has been persecuting. So I didn't understand why are they persecuting those?
What is it, like a meditation technique, or?
Yeah, it's like a Can you see my screen, by the way?
Yeah.
Okay, so so Falun Gong is
At least, and you were able to leave with your kidney and heart and liver, because
Well,
I saw the headline about harvesting of organs.
That's exactly. So Falun Gong itself, it's just like a meditation system, and and also spiritual teaching based on Buddhism and Taoism. But the Chinese Communist Party,
and the Chinese government persecutes people who practice this.
Exactly. More than look, there's so many people here. This is the meditation exercise. So many people in China had been practicing, almost 100 million, and then all of a sudden they get persecuted, and I didn't understand why. So I started reading Epoch, and they've been covering this for the longest time, because some of the people who had to get out of China founded this Chinese paper, or a Chinese paper, to counter the propaganda. And so this is my colleague wrote, Matthew Robertson. This is a report about the state-run organ harvesting industry, which we've been covering for 10 years, where they take those prisoners of conscience, mostly Falun Gong practitioners, and they kill them, and they sell their organs. And now the mainstream media is catching on. They took them a while, but basically we've been leading that for a long time. And this is the reason I started getting in contact with Epoch, because I was reading all of that stuff. And I thought, oh, it would be good, to write for an independent publication that is obviously also covers a topic which is dear to my heart, because I want the people in China, I mean, all of them really, to be free, but especially the Falun Gong practitioners to be able to practice again. Now, how does this tie into the current problems? And this is also, I think, why we have an edge in when we cover the political activity in China. It's because not all of the Communist Party supported this crackdown. It was instigated mostly by the former President Jiang Zemin in 1999, and he had to step down in 2002. But the way it works, he stuffed some of the posts with his cronies, who would continue the persecution. And then actually the president, who was then for 10 years, Hu Jintao, from 2002 to 2012, he didn't actually want to carry that out, but he didn't have the power to stop it, because Jiang Zemin's cronies, they had the paramilitary, the police, all of that they had under control. So they still did all this stuff in the military hospitals, mostly under military supervision, this whole organ harvesting. And then the next guy comes in, Xi Jinping, and he is even less for this persecution policy, and he's even less pro Jiang Zemin, and they even tried to kill him, according to some sources that we have. So you have to imagine, in China, there's always this fight, at least one big fight going on between the Jiang Zemin faction and the Reform faction, which recently, through Xi Jinping, has become more powerful, because he turned this anti-corruption campaign, but in reality, in China, everybody's corrupt. So he just got rid of a lot of the powerful Jiang people, including this guy here, Zhu Yongkang. He used to control the police force. He had 1 million people under him, and under Xi Jinping, he was sentenced to life for corruption. But that's not the real story. And Bo Xilai and stuff like that, all those people. So that's what you have to imagine is going on in China. You have Xi Jinping, who, according to us, is pretty reasonable. I mean, he's still a communist, he's still a dictator, but relatively speaking, he's pretty reasonable, and he's not even that opposed to the United States and Donald Trump. And then you have the Jiang Zemin faction, who still has a few people left, and according to our information, they instigate North Korea to do stupid things. It's not Xi Jinping who says, "Hey, guys, launch a rocket so maybe we can have a better terms on our trade deal." No, he's not like that. It's the Jiang Zemin faction which stirs up trouble. They stirred up trouble in Hong Kong. Now they're using North Korea. And how does that affect China? China, in my opinion, does not like to see this happening, because it's a massive risk. And
yeah, I see one of the risks before there's even any kind of armed conflict. You're showing that this is one of the things they're worried about, Korean refugees, and they're sending them back to face torture and execution. They're not giving them safekeeping or letting them exile.
But obviously not. If they're torturing their own people, then why would they care so much? I mean, they don't care about the people. I mean, all of the communists are like that. They hate people, but they do like power. So for China and even for Xi Jinping, it would be good to keep the northern half communist, because it creates a buffer between the South and the United States to China. So that's what they would like to do. But on the other hand, they don't want, a nuclear war going on. And they don't want any war going on, because the result of that may be that the North becomes free and under American control. And then you have the Americans standing right at your border, which the Chinese don't want. So you have a couple of different objectives here with respect to finally answering your questions about the trade. Yeah, it's the Chinese who do trade with North Korea. But I'm sure the Treasury Department doesn't even know who does the trade, which Chinese company, how it works. They can't control that, and China will just keep doing whatever they're doing, because that is so opaque. That system, it's not like they send a wire transfer through JP Morgan to clear the coal trade. That nobody knows what's going on there. So, and it's very it's not much. And it's probably also military is involved. So don't put too much on those executive orders. Those are, Trump cannot stop China trading with North Korea.
Well, isn't it true, though, that China has also developed something that if there was a problem with the SWIFT system, that they have created a system for financial transactions? If they were to have, isn't it part of their strategy to de-dollarize the world and move it more towards the yuan?
No, absolutely. I mean, from a game theoretical perspective, let's see.
That's what we do here. We trade. That's the game. So I'm curious. About the impact, our bailiwick is currency, so that's going to be a big part of this. If they say, okay, you're going to sanction us, we can't use the dollar, we have another system.
Sure. I mean,
but here you go. Why it won't be the world reserve currency? Could it be part of? Could it be part of an ADR?
Yeah, sure. I mean, basically, the thing from a currency perspective, which unfortunately you can't even properly trade the yuan, it would be an interesting currency to trade. But so basically, first of all, yes, they have, China and Russia are working on their independent system. Obviously, I mean, from their perspective, it makes sense, and they do this on every level. Yes, they have I think they set up, I don't know what it's called, but they do have a clearing system and a messaging system similar to SWIFT.
Okay.
They have their own credit card companies, and they started the Asian Infrastructure and Investment Bank, and they started all those institutions to basically rival the Western institutions. And they got more power now at the IMF, and they're part of the SDR, et cetera, and they are buying a ton of gold. So is that their strategy? Yes, absolutely. Does it make sense for them to do it? Yes, absolutely, because they don't want to be dependent on the United States. On the other hand, they are still massively dependent, first of all, because they still have a bunch of foreign exchange reserves. They do have a fair amount of gold. I think estimates range between 4,000 and 10,000 tons in total, not just official, but obviously in China they could confiscate everything. But even if that's were the case, the assets traded in the financial system
it's not deep enough, and it's not deep enough is why they can't be, right? Because of our treasury market and the deepness of it. Yeah.
Not just the deepness, also the, I mean, obviously we all complaining here about, how the, government becomes ever more authoritarian, but still, relatively speaking, there is a good legal system around the treasury market and the dollar market and the banking system. Whereas in China, you're on your own. You buy anything, you don't know what's going to happen. And I've heard those stories from many people who bought companies and then, they got embezzled or confiscated, or they couldn't do anything. So, so that's a huge issue. And then, practically speaking, yes, the RMB is in the SDR, but the special drawing rights, but it's only like 10%. Yeah.
Okay. 10, so people are out of their minds if they think that the yuan's going to replace the dollar.
I mean, look, anything's possible in 100 years, but not within the next, 5
the
or
S&P,
10 years.
The S&P may even break 10% in the next 100 years. So
exactly.
Right.
Exactly. Anything, yes, it may go down a little bit. Right. Yes.
I'll be right eventually if I'm still alive. So let me ask you this: there's going to be a press statement made by, I believe, the Foreign Ministry in North Korea at 3 p.m. GMT. Any idea what? It's kind of unusual for them to make statements instead of just, going ahead with a test. Any idea what might be in the brewing with them and what they're going to announce?
North Korea, I have to admit, I'm not a specialist. You see, China, I understand because I have that background knowledge, but North Korea, I don't follow too much. My bottom line is always it won't be too bad. And the status quo will usually wins because neither the United States has an interest to invade North Korea, nor does China have an interest for that to happen. So I would say those two are more powerful than the idiot in charge of North Korea, who, he could do something really stupid that would then escalate things. There's a small chance.
Okay. But, so I know you also follow crypto, and I think it's interesting timing that you're here today, a week after China cracked down on Bitcoin. What's the rationale? What's the rationale for that, and how successful do you think they'll be? Is Jamie Dimon right, and or are the Chinese trying to do this to stop some money flows and try and control everything?
So, so this is good. I wanted to talk about that. To answer your last question, yes, the Bitcoin has always been a thorn in the eyes of the Chinese authorities because it's outside the banking system and people have been using it to get money, not even out of the country. I mean, as soon as you transfer it from the exchange to a wallet, it's out of the country. You don't have to, transfer it to an exchange in Europe or in the United States. As soon as it's on a blockchain info wallet, it's out of the country, they can't touch it. So this has, but I imagine, China, they had trillions of outflows. That's another thing. China has so many outflows that's not typical for a reserve currency. But anybody who's more interested in that topic really should read that article here on our website, why the Chinese yuan won't be the world's reserve currency. I list a lot of reasons there. Back to Bitcoin. So yes, it's probably been minimal, but maybe they see the potential that in a crisis it could really become big, and many hundreds of billions could flow into Bitcoin, because so far I think through Bitcoin, I would guess less than 100 billion left the country in China, and they lost more. They lost 1 or 2 trillion in capital outflows in the last 5 years alone. So it's not, it's not that significant. But the Chinese, they don't like anything they can't control. So so they banned the ICOs, which I think is a good thing. I'm not a fan of ICOs. Bitcoin I like because it's not controllable, and it actually is true to what it promises to be sound money. But we know that the exchanges are going to shut down, and I've heard some rumors like here. This guy, he's head of research at Blockchain Capital, and he says we haven't seen the worst yet. OTC trading is going to be banned. Mining facilities may be taken over.
So
And
there's finally a war against Bitcoin.
yes. And by the way, I've heard that through other channels too. So, you know, this is all unofficial and stuff like that. But I've heard it through my network that, yeah, they may even ban it on a protocol level where they build, you know, they ban it on the Great Firewall. So you can't send Bitcoin transactions. And then the question is, you know, what happens to the price? Like, in my opinion, you know, I'm not a chartist. I don't have these fancy charts, but, you know, look at the price every once in a while. And you see that, yeah, I think the worst was priced in here at 3,000 because we didn't know what was going to happen. And then we get confirmation, okay, the exchanges are going to shut down. Okay, we've been waiting for that to happen anyway for the last 3 years. So now it's happening, price rebounded strongly. Now we don't know what happens to OTC trading, ownership, and mining. But, you know, it's going to be an interesting test to find out how Bitcoin
looks like it could go either way.
Right now it looks like it's
3,000. Right? Yeah. Looks, I could make a case for 5,000, or breaking that 3,000 low.
Absolutely.
Would make it pretty vulnerable to take it to, you know, down to 1.
Yes, well, not to 1, but, you know, probably down to 1,000.
Yeah, that's what I meant. 1,000.
Oh yeah, okay.
Yeah, okay.
Not $1. And so, but it's an interesting experience, because that is true. The Bitcoin community largely believes in. That's why a lot of people are buying it. It's independent of governments. The government can't control it. It's sound money, and you can, you know, use it even under the most adverse circumstances. So my opinion is, let the Chinese try it. Let the Chinese ban it. And my guess is it's going to be okay. Obviously, there's not going to be any more speculative volume coming because they banned the exchange, which may be a good thing because the Chinese have a bad gambling habit. And you know, you can still, and that depends on one thing. Can Bitcoin survive in China? The question is, can the free internet survive in China? And I know they tried banning the VPNs, but they haven't succeeded. So as long as the VPNs succeed, and you can still access your blockchain wallet, and you can still, you know, basically send transactions, you can earn Bitcoin, and you don't even have to use local Bitcoins. You can still, you know, buy and sell them privately, and there's not much the Chinese can do against it. So I'm cautiously optimistic that this will be resolved in a positive manner, but obviously there's going to be some short-term volatility.
You know, what a very interesting interview. I'm so glad I reached out to you, Valentin, on Twitter, and, you know, to get these, you know, after hearing what goes on in China, I certainly hope that our country is cautious about getting into any hot conflict with them. I think they should remember what happened in Korea in the 50s when they came over the mountains and, you know, humbled MacArthur. And, you know, a country, I don't know if it's happening in the US, but a country that places such a low value on humanity that it's just a product to harvest organs. I'd rather be friends than enemies. So, you know, great interview with you, and I know that there are people listening or will hear this. They're going to want to follow your writing. So on Twitter, you're at VXS Schmidt, and is there a web address for Epoch Times? Or
yeah, I have most of my stuff on Twitter. Yep, at VX Schmidt, and then I have my author page at Epoch is right here. So you can just Google Epoch Times and my name. And
yeah, nice. Very. I mean, you cover a lot of different ground, but you know, it's all part of the big jigsaw puzzle, isn't it, Valentin?
Absolutely, everything is connected, and we can only have a sneak peek into most things because a lot of things are quite complicated.
Yes, yeah. The dark web is there's darkness out there, and a lot of things never come to light. So thank you for your efforts as journalists to dig them up and keep people informed, and appreciate the fact that we've met, and perhaps we could have another conversation down the line and see what develops here with the inner power struggles in China and what's happening geopolitically and economically with the U.S. and China down the road, my friend.
Absolutely, Dale. Thank you so much. Yeah, I'd love to do that.
Okay, well, thank you again, everyone. Thank Valentin Schmidt for being with us and covering Bitcoin and China and game theory. So that's it for us today, Face. We'll see you tomorrow for Turnaround Tuesday. Remember that there's only 7 days left, 8 days left to subscribe to get into the trading room. And I look forward to seeing everyone tomorrow. And most of all, don't just count your pips, count your blessings. See everyone tomorrow. Thank you again, Valentin.
Thanks a lot, Dale. Take care.
Okay. I'll be tweeting this interview on Twitter later on in the day.
So you're going to edit it?
Yeah, that's produced, and then I'll get you a copy of the interview.
Okay, fantastic. Well, yeah, let me tell you, thanks a lot. I will definitely promote it. Don't worry.
Okay.
Yeah, thanks a lot. That was a great opportunity, and I hope I could provide some insight, because, as you say, a lot of things are hard, and it takes a lot of research until you develop your framework. And then once you have a framework, stuff that happens sort of easier to understand, but still, like, many times you really have to get knee deep into the stuff, and that usually then leaves 1 or 2 or 3 areas where you can really do some research. Because, like, even crypto and Bitcoin, like, if you really want to understand what's going on with the different protocols and stuff, like, I was much more scared about the hard fork and Bitcoin Cash and SegWit, because if they screw up the protocol, the whole thing is screwed up. You know, it's like destroyed from inside. But, you know, if China comes from outside, tries to ban it, yeah, you know, let them try it. That's okay. But that takes so much time to, like, learn about all these things.
Yeah, thank you, and that's what I mean. Thank you for your mission to condense it, and for old timers like me, make it comprehensible. Okay.
So where,
thank you, buddy.
Where are you based?
Excuse me?
Are you in New York?
I'm in California.
Ah, okay. Wow, it's early over there. Okay.
Yeah, I'm like a farmer. All right, buddy.
You farm the news. Okay, yeah. Do reach out if you want to talk again, and I'll definitely promote the interview once it's ready.
All right. Thank you, Valentin. See you guys. See everyone tomorrow.
Bye.
Adios.
Bye.